Hello guys, welcome back to the boardroom. So yes, we are back on the boardroom as everyone already knows, the boardroom is only for special occasions. And I've booked it up today again because we do have a special occasion. We're going to be talking about how to actually and effectively analyze the non-farm payroll. Because there is so many things that people can ask themselves about the NFP. As we know, as we saw just last week on Friday, we had a huge move on the market, Australian dollar against the US dollar, euro against the US dollar against the Japanese yen, New Zealand dollar against the US dollar, USD CAD against the, US dollar against the Canadian dollar. So we did have big moves happening on the market, and this is because the NFP, the most awaited data point from the USA, as with the other ones as well, but the NFP is the one that everyone eagerly waits for on the beginning of the month, for the first Friday of the month, the first week. Now, so before we start, if you haven't yet watched the part 2 of the strategy, you're missing out. So pause this video because this video won't make sense to you if you haven't yet watched the part 2. So go there and watch part 2. Dave, please put the link somewhere here or there or in the description. You will be definitely find the part 2 video. Now, let's get into it. But before, guys, please subscribe to the channel, give us a thumbs up and share this content with your friend. If you do have any comments, if you do have any feedbacks, any questions, please put down in the comments that I will be reading those comments and trying to answer everyone as soon as possible. Okay, so let's get into the point. We have NFP. So when is NFP released? Because every data has a different day on the market to be released. So NFP is not different, it's nothing different, right? It's another data point that will present to us every Friday, okay? It's every Friday, it's on the Friday, it's not on a Thursday, it's not on a Sunday, it's not on a Monday, it's on Friday. So every first Friday of every month, okay? At Australia, the non-farm payroll is usually between 10:30 to 11:30 p.m. on Friday, on the first Friday, okay? It can probably, let's say, let me get my calendar here. So last Friday, we had the NFP on the day of 4th of October. The next NFP will be right on the 1st of November, because the 1st of November is the first Friday. In December, we're going to have the first Friday as the 6th. As the 6th of December, then we're going to have the NFP. So we have different data, we have different dates for every month. It's not only on the first day, it's not the first day, it's the first Friday, okay? So I think everyone that watch us already may know this, but for you that are starting on the market, again, I repeat myself, this won't make sense to you if you didn't watch the part 2 yet, so go and watch part 2. Okay, so lots of people get confused about the NFP, and this is why I've thought about doing this video for everyone so no one gets confused anymore. And I'm making sure that once this video finishes, you will be understanding what's NFP and what's the importance to NFP and how this affects the US dollar. Okay, so 3 points. You will understand what is NFP, what's the NFP composed of. You will understand how important this data is and why is that important. And third, and not last, and not least but not last, why is this so strong for the US dollar? Why this moves the market that much as we see every first Friday of the month. Okay, so lots of people get confused, as I was saying, lots of people get confused about the NFP being just the NFP, when it's not. The NFP is actually a combination of 3 main data points, okay? Of course, you have the actual NFP being the NFP, that stands for non-farm payroll. It's pretty, subject straightforward. So non-farm payroll, so it's the non-farmers payroll. So how much people have been added into, how many jobs have been added into the economy on that period of month, the labor market, except the farmers, okay? So non-farm payroll. So how many people got paid, how many people get actually jobs on the market, on the labor market for a certain period. In that area, it's a monthly period, okay? So the non-farm payroll is a monthly indicator of how many people have been actually working on the labor force from 1st of, let's say, December to the 31st of December. So it's an actual full month of data, all right? But get released on the next month. So the data of December will be released on the month of January. 1st of January could be a Friday, but let's say we're assuming here 1st of January is a Friday, 31st of December is a Thursday, so the next day will be Friday, the new month, the first Friday of new month, and we got released the NFP. Okay, so right here we can see that we have all the three datas, okay? So we have the actual NFP, right? That stands for non-farm payroll, okay? So let me write this down for everyone. So the NFP stands for non-farm payroll, okay? So non-farm payroll is what NFP is, okay? Let me just put 2 dots. Cool. Second, we have the unemployment rate that will show to us how much a percentage of the population has been unemployed on that specific period. That is on a monthly basis as well. Again, this is a combination of, NFP is a combination of 3 actual data points: NFP, the non-farm payroll, unemployment rate, and the average hourly earnings that we're going to be talking in a minute. So unemployment rate will show to us right now on the US, on the last release last Friday, we had 4.1% of unemployment rate. How does these get counted? So it's pretty simple. If we had 4.2% last 2 months ago, in the month of August, we had 4.2% of the whole population of USA being unemployed. So let's say we have 1 million people, 4.2% of this million people, so this will be unemployed. So 42,000 people will be unemployed on that month. But of course, this is just, scaled down the things for everyone, because the USA population goes over 1 million people, right? This is probably on a suburb or something like that. USA is huge. So this is why it's so important to us. It's a big trade partner for most of the globe. And this shows a lot of repercussion on the market, all right? And then the last but not least, we have the average hourly earnings. Now, this is important as the this is important. The number 3 is important as the number 2, the unemployment rate. But of course, the most important one here is the actual non-farm payroll. All right. So, but what I want to present here, it's a new way of looking at the NFP that you may not understood yet. But this should be taken as a one thing, okay? This should be taken as a one thing. So the number 1, 2, and 3 should be only 1, okay? So we got NFP, we got unemployment rate, and we got average hourly earnings. Now, the average hourly earnings pretty much will show to us how much averagely those people get paid on an hourly rate, okay? The hourly, I think the last release we got was going up, so this is good, okay? Because people are getting paid more than they were in the last month. Of course, we have, again, it's not huge numbers, but if it increased 0.1% is already a big take, all right? Now, I think everyone could understand very well this, so pause the video, do some notes around this, and then we're going to continue to the next part. Okay, so coming back now, I've erased pretty much everything here, and I've done the real numbers that we got from the last. So we're doing pretty much a case study here. So then in the next NFP, in the next month, you can actually come and watch and try to interpret what we will do to the NFP. So the first thing we know now that everything should be combined as a one piece, and not only looking at the NFP, and yes, looking at the overall 3 actual releases that we got on the NFP day, okay? And again, they are the non-farm payroll, the actual NFP, the average hourly earnings, and the unemployment rate. Okay, now, this is the actual numbers we got from last Friday, okay? The 6th, 7, 8, 9, no, I think it was the 4th. The 4th, yeah, I think it was somewhere around 4th or 5th of September. Okay, so the NFP came up to be 254,000 jobs. So 254,000 people getting employed on the month of, not the month of September, the month of, not the month of October, sorry, the month of September. Okay, so that's always, again, we got the release on the month of October, but the actual data point is for the month ago, so the month of September. Okay, so let me just write down here, SEP release. And then I will just put down here, October release it. All right, so now we all know that the September release was those numbers and it was released on the October. Okay, so NFP again was 254,000 jobs people getting jobs on the month of October. The average hourly earnings rose to 0.4%, giving an average hourly on the USA of $35.36. So these 254,000 people got employed on the month of September. They are getting an average hourly earnings of $35.36. And the unemployment rate was 4.1%. Okay, of the whole population of USA, that is $331 million according to 331 million people according to Google that we've done a search just now. Okay, so 4.1% of 331 million is 13,571,000 people unemployed for the month of September. Now, this is the data, okay? What can we do with this data? We can't do much, right? We can't just, okay, 254,000 divided by this, no, we can't do this. Now we have to put this in a context, okay? This is where it's the most crucial point that no one actually got it until today. And I hope you understand what I'm trying to give for free here for everyone is looking at the data but putting context on top of it. All right, so let's just have a context here. So those numbers, they can't come from nowhere, right? Just pop in, and now we have 254,000 people new jobs, $35, $36 average earnings, and 4.1% unemployment rate. So we can't have the number out of nowhere. Where those numbers come from? Well, those numbers come from the BLS, the Bureau of Labor Statistics from the USA. So this data point is released by the BLS. Okay, let me just note down this for everyone. So let me just cool. So the data here is released by, so let me just do release BLS. Okay, BLS stands for Bureau Labor Statistics. Okay, they have a website that you can actually go in. It's just www.bls.com.gov, somewhere around that. I'm, just a little bit out of my mind, but if you type BLS USA on the Google, you will get the first link. You can actually go there. I've shown these many times on my webinars. you can have a go over there. You can download the reports of the non-farm payroll. You can see how much of each niche of the jobs market. So let's say nurses, how many new nurses we have, how many new laborers on construction we had, how many financial new jobs we had, how many government jobs we had, how many medicines. So there is all the breakdown there. We don't need to go that far, okay? But maybe in the future I can do a second part of how to analyze the NFP, and we can go like deeper as this. Okay, so coming back here, this data is released by the BLS, Bureau of Labor Statistics. It's a public website on Google. Now, what can we do with this data, right? So this is the big question. We have to put this in context. So how this can shape the US dollar, okay? Lots of people have this question, and we all know that this will be a huge effect on the market once it gets released. So we need to pay attention into two things, all right? So the NFP, the higher, the better, okay? So note this down. NFP, higher, the better for the US dollar. Average hourly earnings, the higher, the better. And last but not least, unemployment rate, the lower, the better. Okay, so it's pretty simple maths here. So if we look to NFP to expecting to be 100,000 and it comes to be 200,000 in the actual release, then the actual is much higher than the consensus. Therefore, the market will be reflected as positive. Okay, the average hourly earnings, if it comes to be 0.1% consensus and it comes to be 1%, so this has grown 1% on top of the $35.36, the previous release. I'm just assuming this is going to be the previous release. $35.36, 1% of that will be somewhere around 3.3%, so $3.3. So this would go to 38 maximum rate of the average hourly earnings. So they've jumped from 35 to 38. That's a pretty good increase, right? So it's pretty good to the population. So it's just showing that it's the job market is still very hot. And the unemployment rate, the lower the better. So of course, less people here unemployed is better for the economy, because if those people are unemployed, that means 13.571 million people are not buying products from the retail industry, are not actually I would say not proposing, but helping the economy to grow in a sense of manufacturing and services, all right? So it's all linked together. We can't forget this. Now, what does this all show to us? This shows it's a very, very important thing. It shows if the labor market is strengthening or if the labor market is weakening. And if the labor market is strengthening, that means that the economy is going forward. The economy is doing very well. Second is if the labor market is weakening, then it shows that there is some problem happening on the economy and we should pay attention because it may have a recession soon. Not in all cases, this is not a rule of thumb, but we should pay attention that something big is going to happen. Now, we are on a very, very special moment on the market. They are the central banks, okay? So this is one of the data that the central bank of the USA, the Fed, the Federal Reserve, will discuss on the meeting of the FMC, the Federal Open Market Committee. This is where they will think about it. Okay, the labor market is strong, the labor market is weak. The labor market is strong and we still continue to maintain a good labor market. Why shouldn't we continue to do the monetary policy we're doing and maybe continue to lower the interest rates in the future? So this will shape how they think about the context of the economy. Okay, so now you know how the actual NFP works. So how can you trade the NFP? Well, this is my secret sauce, okay? I don't give it out to everyone, but as you hear and as you subscribe to the channel and you give it up a thumbs up on this is how I trade the NFP. All right, so now the big question comes up. how to trade the NFP. And this is the part that I've mentioned it since the beginning. If you're here and you haven't watched the part 2 of the video, that it's somewhere around here or 100% sure in the description of this video, then you're sort of wasting time and won't be able to understand what those numbers mean. -2, -1, 0, +1, +2. So just go there. You know, it's a half an hour video. Just watch it and come back to here. Okay, so I continue to use my system as usual to trade any sort of data in the market. Okay, and what I like to do is use the part 2 of my strategy to find the weak or the strong or the stronger, sort of get ready once the release comes, and I will only trade on 2 occasions. I won't trade the NFP in 1 occasion. So there is 3 occasions that can happen. There is 3 possibilities that can happen when the NFP comes, but I will only choose 2 options for the NFP to trade the NFP. That was the last week option that we had, and I will discuss that in a second with everyone. So again, what I like to do is, let me just note it down here. 3 options to NFP. Okay, so first, second, and third. You're gonna get there in a second. All right, so as I was saying, I like to use part 2 of my strategy to analyze the very bearish or very bullish currencies, and I tend to prefer to use very bearish or very bullish only, not bullish and not bearish, because the NFP is a big take on the market. Therefore, I will like to use the extreme points of both of the currencies. Okay, so of course one of the currencies will have to be the US dollar, because the NFP is for the US dollar. So I'm just going to put down here. So the first currency I will like to pick is the US dollar against something that we will find, or against something that we will find to the part 2 of the strategy against the US dollar. Okay, so let's get into the point, the part that everyone has been waiting for: how to analyze the NFP. As I say, there's only 3 takes that it can happen, the only 3 options that can happen on the NFP release day. And the first one is mixed data, okay? Mixed data. The second is the bullish data. And the third is the bearish data. What I mean by this is pretty simple, okay? So I just want to note it down here so everyone can get it. So if the option number 1 comes in, okay, let me grab this one. If the option number 1, options, so if the option number 1 comes in, this we will be looking to, I'm gonna very quick here, NFP, AVGH, and unemployment will be all mixed. So if the consensus was 1% for everything, okay, so let's say the consensus and the actual, okay, so let's say the consensus was 1% for everything, just so we have it quick and easy on the go. The NFP comes in to be 0.1%. The average hourly earnings comes in to be 1%. And the unemployment rate comes in to be, let's say, 0%. So this is a mixed scenario. We have a negative NFP, we have a as expected average hourly earnings, and we have a break even on the unemployment rate, so 0%. This is a fictionary case, okay? So just everyone know. So this is the consensus and this is the actual. So this is mixed data. I won't trade this option, okay? So I won't be trading the first option that can happen on the NFP, all right? I won't trade this data. I will only trade the bullish option and the bearish option. There is, let me just change this to number 2, and let me just wipe this down so we can use it to number 2. So number 2 is a bullish scenario. So the NFP was expected to be 1%. It comes in to be 100% better than what was expected, and it comes into 2%. The average hourly earnings was 1%, and it comes in to be 1.8%. And the unemployment rate was 1%, and it comes in to be 1.5%. Now, we have just look at a bullish scenario, number 2, option 2 here, and I will be looking to trade long on the US dollar, okay? Long USD. So that means from the very bearish to the very bullish, I'm looking to option number 2 on the US dollar. So that means that the base of, if the base is the US dollar, then we look into an up market. If the quote is US dollar, we look into a down market, a bearish market, okay? So in this case, option 2 would be US dollar on the base, just go up, and option 2, the US dollar on the quote, would happen to the market to go down. Okay? Perfect. Now, what we will fit on here is a very bearish, because we want to the extreme of this, the part 2 of the strategy. We want the extreme. So the extreme would be the opposite of the actual bullish. So this is very bearish, okay? So this one could be Japanese yen, or this one could be the Canadian dollar, okay? Now here, it could be the euro. It could be the GBP, the pound, okay? So this will depend on what you can get from the very bearish to put on here and to put on here, all right? Now, the last option is the very bearish, okay? Is the bearish option. Let me just wipe this down so we can go ahead. If you haven't liked the video yet, please do it. I'm just waiting for that. So this is really good content. I haven't seen this sort of content on the YouTube. Okay, perfect. The last option is the bearish option, right? The bearish option is pretty much third option. So here, third option. The bearish option will be if the NFP comes in below the expected, the consensus, the average hourly income comes below the consensus, and the unemployment rate comes below the consensus, right? So the NFP would come at negative 0.1%. The average hourly earnings would come at, let's say, negative 0.2%. And the unemployment rate comes in at probably negative, let's say, 2%. Okay, so that means that this is a bearish option. So what I would like to do with the US dollar is short US dollar. And that means that we are on the very bearish. So I will be looking to a very bullish currency. So if the US dollar is on the base currency, then I will be looking to short. Okay. And if the US dollar is on the quote, I will be looking to long. Just the opposite of what we just saw. This is option 3. Okay. Now you know the strategy behind the NFP and how to trade the NFP. Now it's time for you to actually take action and do something with your trading and try those strategies. This is another video of the series of how to trade, and I'm really happy to be sharing this content with everyone. I hope you guys can understand what I've been talking, and if you have any questions, please just put at the comments, and I will be definitely looking at those questions soon I have a time. Guys, thank you so much. If you haven't yet watched part 2, do it. Otherwise, this won't make sense to you, I promise. All right? Thank you so much again. Subscribe to the channel, give us a thumbs up, and I'll see you in the next one. See you.